We think that this is a market that's going to continue to grind higher, throughout the next, 6-8 weeks towards 6,500, which is our full year price target. I think once we get past, the debt ceiling and past the actual tax bill, I think it may be a sell the news event.
You just heard from Lisa Shallot. She's Morgan Stanley's CIO. And what we're hearing from investment banks and analysts all across this country is that uncertainty for the markets is gone now that the tax bill is passed. And what that's doing is setting up a major upside move for the S&P 500. In fact, the consensus view right now is it'll touch 6,500. But one expert, possibly the best in the business right now, is saying hold fast. There's some major structural issues underneath this market, and Wall Street doesn't want you to know about them. In fact, he's saying that it could trigger a sell signal as soon as this week. But before we get to that, tonight's show is brought to you by Light AI. You can find them on the CBOCA and a symbol ALGO, and on the OTCQB and a symbol OHCFF. And they're a healthcare technology innovator who leverages AI and smartphones to deliver accessible, cutting-edge diagnostic solutions. Now, let's head over to Bank of America, where we hear from none other than their lead analyst, Michael Hartnett, who's warning that we could see a sell signal as soon as this week. Let's take a look at what he's saying. Because in his weekly flow show that showed up in my email this week, he said one big beautiful bubble. He says you can't cut debt, so you go big with tariffs. So the only way you can pay for the one big beautiful bill is with one big beautiful bubble. And he knows it's bubble or bust, and the summer risk now is skewed strongly to the former. And he notes that his B of A global breadth rule, that is when greater than 88% of the MSCI All-Cap World Index country stock indices are trading above their 50 and 200-day moving averages, well, that means you need to sell. In July, a move in the S&P 500 that hits 6,300 or higher is likely to trigger that sell signal. And based on where we're seeing the markets at right now, that could happen as soon as this coming week. Let's take a look at what he's seen here in their rules and tools. In fact, there's two indicators you need to be aware of. The first is the Global Fund Manager Survey Cash Indicator. You want to buy when cash is at or above 5%. You want to sell when it's below 4%. And we know that fund managers have to play chase. The current reading is at 4.2%, likely to go down as markets go higher here. But how about that global breadth rule? It's at 82.2%. And he said if it breaks 6,300, which again could easily happen this coming week, it would be a major sell signal for Bank of America. But that's not the only risk he's seen. Let's first talk about machine positioning here. There's absolutely no risk that we're going to see machines selling this week in an uptape. They're buyers of about $8 billion of global equities, a mere $1 billion into U.S., so not as much flowing into U.S. equities. But over the next month, if the market were to go higher, you could see $87 billion in global equities bought. So put that on your radar if you're looking for an opportunity. Look outside the U.S., but $20 billion could be flowing into U.S. equities as well. You could see this market shoot higher. But if you're worried about a sell signal, well, the short-term indicator for the CTAs is sitting at 5,918, a far cry from the current price. So nothing to worry about for machine selling. But what is the other risk that Bank of America is flagging here? Well, it's everything to do with breadth. And they say right now, this is the worst in history. And what they note is they have the smallest breakout stock participation, meaning is literally determined by a handful of stocks, and that's not what you want to see here. In fact, there are just 22 S&P stocks currently trading at all-time highs, and that is the worst breakout in terms of breadth. So this is a major warning sign here for this market. In fact, as we now turn back to Goldman, what they note is this is the narrowest bull market in history. In fact, the top 10 companies now account for a record 38% of the market cap and a record 30% of profit. So what that's telling you, if you're going to chase this market higher, you want to concentrate in those stocks, but you want to keep your finger over the sell button, because when things reverse, they could reverse very quickly. But let's talk about what's overbought and oversold, because as we look into the markets in our show today, not only do we want to find out where the risks are at, but I want to talk about where the opportunities in this market are for you. Plus, we have a trade set up right off our reports for you. It's hitting on Monday, so I want you to see that. Stay tuned to the end. But let's talk about what's overbought. In the top ones, it's gold and bank stocks. We're going to take a look at that. And I know a lot of you said, hey, gold didn't sell off as you thought last week, but wait till you see the charts. We're not out of the woods yet. If you're bullish on gold, hang tight. We're going to take a look at that in a bit. But if you're looking for opportunities, you want to find things that are massively oversold. And one of those is the dollar. The other is Japanese bonds and long-term U.S. government bonds. Now, we know that Bank of America is bullish on the long bond, but we're going to take a look at all the charts of those as well. But let's talk about something that came out last week. That was the Russell 2000. So while we see the S&P 500 and NASDAQ 100 pushing to new all-time highs, there's a major red flag showing up, and it's in small caps because they're a long ways away from their all-time high. And in fact, if they don't rally and join the mega caps, it's a warning sign for the economy. We do know that small caps have a much stronger pulse of what's going on. Let's first start out about talking about breadth. Now, last week we noted that breadth was lagging here, but all of a sudden breadth pulled up as well as price. Price shown in black. In fact, right now, a little over 50% of the Russell 2000 stocks are trading above their 200-day moving average. If that continues to rise, it's a very bullish indicator. But let's talk about our screens here. Let's first take a look at the Russell 2000. What do we see? Momentum is positive. Now, how do we know that? Well, we have something called our Momentum Timer Pro, which we run momentum screens across the broad equity, bond, currency, and commodity markets every day. And how do we do that? Well, we aggregate technical indicators like the relative strength index, which is now in overbought territory at 72. We also factor in things like the MACD, or moving average convergence divergence. It's got a positive cross, but we also add in the trend. Now, we do look at machine position. We model what those CTAs are doing, but we run it with a historical overlay, and we're modeled that they should be 100% long here. Now, if you want to trade against the machines or you want to trade momentum signals, all you have to do is grab those links in the description below, take a look at those coupon codes, or grab you a free 30-day trial. You're going to see the difference right here in today's show of the edge that we bring to the market. Let's talk about first IWM here, because what we can know is that it finally broke over its 200-day moving average. That's that tan line there you see running across your screen. It rallied up into its one-year volume profile. Now, we noted before that that was the major risk here. It could get rejected there, but momentum, again, was rising. It's now in overbought territory. But on Thursday, it closed over its one-year volume profile. And what is that doing? It's setting up a potential move into this upward supply zone. Now, what is the supply zone? If you're not familiar with that, it's where either buyers or sellers are at. So as you go up in price, you run into sellers, and you can see very clearly there's been sellers here. The risk is it gets rejected there. If that were to happen, it would be a very bearish indicator for the broad economy and the S&P and NASDAQ as well. But let's turn to bank stocks, because everybody is bullish on banks. Booming economy means people borrow money. Maybe the Fed cuts rates, but the problem is if the economy is slowing, banks are going to take a hit. Let's talk about what's going on with XLF. Right now, momentum is positive. It too is in overbought territory, but the trend is up and machine position is long. If you're looking to go long, those are the signals you don't want to see. You want to look for machine position in deep short positions. You want to see, of course, momentum deeply oversold. That's where you pick up your upside opportunities. And what do we see in XLF? It broke out of that upper sell zone, and price is taking off. Of course, where does it go from here? We don't know. But if you want to chase things at their all-time high, there you go. You can chase the broad market. But if you want to find things that are oversold that no one's looking at, maybe they're even short on, some of my biggest returns that I've ever made come from buying things that nobody else wants. And when they're forced to cover their shorts and go long, you can see price shoot higher. One of those right now is the long bond. We're hearing this from Bank of America as well, and others saying that the CTAs and trend followers are likely to continue and increase their buying of government bonds, particularly U.S. Treasuries. So let's take a look at TLT. Momentum is positive right now. We can see the RSI is at 50. MACD's got a positive cross. We're seeing on 12 consecutive daily buy signals on our Momentum Timer Pro report, but we're currently not holding a position because we've gotten stopped out of this. We keep looking for an entry point, but we haven't found it quite yet. But the chart is setting up something very interesting here. Let's flip over to TLT, because what we can know It's sitting right below its 1-year volume profile. Now, one thing we've talked about before, and let's zoom in to see this, is crosses of moving average. So you see that green line, that's a 50-day moving average. And when you see a cross against that, as the moving average is starting to bottom out, and you see price come down and hold it, that's a bullish indicator. In fact, you can see that red line below there, that's a 21-day moving average. So right now, price rallied up to its 100-day, got rejected, it's done that before, pulled back into its 6-month volume profile right above its 21 and 50-day moving averages. That is a bullish indicator. However, zoom out to the 1-year chart. Again, you've got rejection there at that 1-year volume profile. So you want to be looking this to break out over 87.68 to really see some bullish moves here. You can see technically it is a very strong position, but it just hasn't happened yet. But let's talk about gold, because again, a lot of you said, hey, in the comments, Steve, you got that one wrong, but maybe not yet. You know, things don't always happen overnight. You have to look at the charts and see. What do we know from machine positioning? We can see the machines are not long gold here. They backed off a bit. Now on our fast algorithm, only 15% long. On our slow algorithm, only 35% long. Momentum has clearly turned to the downside, meaning technically you're seeing those indicators drop as well as price. Let's take a look at GLD and why I'm still not turning bullish on this. And I know what you're going to say in the comments. I already know what's coming, but it's all right. Let's take a look at the charts and let them do the talking. Because right now, price is sitting just above his 6-month volume profile. It held support on his 50-day moving average, but got rejected at his 21-day. So again, whether it's a 50-day or 21-day, if you have a cross to the downside and you get rejected underneath it, it is a bearish signal. Again, if we break 304.57 here, the risk is you're going to see this run down to its 100-day moving average and could go lower. Remember, uncertainty is gone, and that's why people said they were buying gold. But let's talk about another potential opportunity. This one we'll put on your hot list. It's not one you want to look at right now. It is the dollar. And right now, momentum is negative. In fact, it's been negative for 25 consecutive days. Look at this, machine positioning, max short. You see momentum, max short, particularly on our 1-month window. Now, when you see that combination, that's something, again, you want to put on your radar, because when it reverses and you start to see the technicals go up, what happens is traders jump in and then machines jump in, and next thing you know, everyone who is short, well, they have to start covering, and you can see price rally. Now, you can trade this in multiple ways. You can be long dollar or short another currency. Either way, this is very interesting. This one's on my radar as one of my potential big trades for the second half of the year. Let's take a look at UUP. Technically speaking, momentum to the downside hasn't turned around. Price rallied up into its 9-day moving average where it's gotten rejected before. So price-wise, still bearish signal. You see the 6-month volume profile at 27.43. You'd want to see price rally up here and then break through all of that volume. There's a lot of shorts here, and next thing you know, you have the potential. The dollar could go screaming higher. But let's take a look at our trade that we put up for our subscribers to go on the books on Monday. This is a dollar bullish trade. It's the ultra short yen. Now, momentum is positive here. The RSI is at 54. MACD still got a negative cross, but maybe not for long. What triggered this? One consecutive daily, I should say, buy signal on our report. Here's our live stop loss level, 41.53, and that's right, you get stop loss levels and everything on our reports each and every week. Let's take a look at that chart of YCS and why we told our subscribers that things have changed. And you can see very clearly, got rejected as 100-day moving average, pulled back, broke through its 21 50-day moving average below its 6-month volume profile, and then on Thursday rallied up above that. You're starting to see some signs that momentum here may be turning back up. As long as it holds that 6-month window, what you're looking at is a potential move higher here. So we put that one on the books, and that one's yours to trade if you want. But you can see there's major structural risks in this market. While a lot of experts are calling for 6,500, what you're hearing is Michael Hartnett saying, look, 6,300, breath is terrible here, and you could see a major reversal, particularly if it hits one of his sell signals. But something we are bullish on, and that is the stock for our sponsor for today's show, Light AI. And again, you can find them on the CBOE under symbol ALGO, on the OTC QB under symbol OHCFF. Everything you need to know in the pinned comment and description below. Light AI develops AI-powered health diagnostic and wellness solutions using smartphones, eliminating the need for swabs, lab tests, or proprietary hardware. Their vision is to create a digital clinical lab for rapid, cost-effective diagnosis of various conditions. And Light AI's patented technology uses a 4.5 billion smartphones worldwide as its hardware platform, paired with cloud-based AI for diagnostics. The platform targets critical healthcare challenges with accurate, scalable solutions. And Light AI's competitive edge is in delivering non-invasive diagnostics to address major unmet needs for strep A and other infectious diseases. And through this partnership with social media star Jimmy Donaldson, aka Mr. Beast, Beast Philanthropy will donate AI-powered strep A tests, enabling faster and more accessible diagnosis in underserved regions in Africa. And Light AI reported its Q1 2025 financials, making progress after raising $18.5 million through equity financing. The company strengthened its leadership with key appointments, including Anthony Schaller as president and CTO. And Light AI bolstered its patent portfolio with 2 new European patents, one valid in the UK and Spain, and the other covering 17 European countries. These patents enhance their proprietary technology, strengthening their market position. And progress is being made on the wellness app's innovative and intuitive UI design, which will provide a seamless and empowering user experience. The company anticipates showcasing a closed demo of its wellness app within approximately 90 days to support its pre-commercialization initiatives. And Light AI's innovative approach, recent financial milestones, and upcoming app launch highlight its potential in the expanding AI healthcare market. The company's focus on scalable, smartphone-based diagnostics make it an intriguing prospect for those interested in health tech advancements. For more information, point your browser to light.ai, and again, check them out on the CBOECA _algo and on the OTCQB OHCFF. And as always, with any company we feature on our show, you're under no obligation to purchase their stock. Be sure to do research before placing any trades. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.